Well, hello, investors and traders. L.A. Little here, founder of Neoclassical Technical Analysis. This is the TAToday site, www.TAToday. If you want to visit us, I'll pull that down so you can see it. This is the place you go, and you can get information here. Matter of fact, I don't do these broadcasts all that often. If you want to stay up to date with what I'm doing, come over here, log in or get yourself a login. Once you do that, you can pull over content that's on the site. It's always 2 weeks delayed, but there's a breadth of content out there. That content is available to you. You can see trades that we're making. You can also see, of course, videos that I make, articles that I put out each morning, videos that I make once a week. They're all there available to you on the site. Last time we talked about the breakdown that looked like it was coming. I outlined some trades that I thought would be useful to make, and those trades, if we take a look at them, I go here to the indexes and pull those up. You know, I had talked about a couple of them. One I talked about was the Russell. And on that Russell, we looked at the long-term time frame. I was looking at the monthly time frame and telling you that if we broke on the Russell, you should expect a faster move down. The area that we were testing at the time, we were at this point on the chart. We were looking at that swing point low. We're talking about multiple time frames breaking and a trade back to these highs back here. If you remember, you can also go view that video if you want. Back into this bar, back into these swing point highs. This is the bullish retest regen zone. We also talked about the fact that when it got there, you would expect it to get bought. And sure enough, you can look at it kind of a clean break back to the top side on the weekly here. Once it got down there, that's in fact what happened. Now, you know, these faster moves can overshoot a little bit. This one did. And then you get the reversal and the way back up. So, you know, what are we doing now? We'll just use this chart since we're here. You're coming back up now to do the bearish retest regenerates. And so that is into the bar now. And that push back up has gotten over the high of the big breakdown bar. And the Russell actually has been the cleaner one and the more strong one on the way back up. That could be good or bad depending on how you want to look at it. But if you take a third of this bar as a rough estimate, that's about where this thing can get, which coincides with this high of the prior bar. These lows that you see down in here, that's up around the 13, let's get the number for you. It's up around the 1466 area. And so that's, you know, this thing could definitely bounce up into that area, get up into the 14, as high as 1470, 75. And that's where you would expect the sellers to show up. Now, I'm doing this on January 10th midday, and you know, we had a down day to open. It's the first down day after a while, and they came right back in and bought it. And typically, that's not uncommon to see. We got a lot of things happening out here. You know, the Fed's going to be more accommodative. We're potentially going to see the tariff problems with China resolved. The government shutdown still going, but people expect that to get resolved. You're seeing things that after a big drop, you know, you typically see, which is, you know, we're going to keep this market up somehow. That's always the way it works, right? And so this big structure to the downside completes. You get the bungee bounce back up, and you would expect that you're going to get some sellers to come back in here. And I do expect that's in fact what we will see as this proceeds. We're going to see the sellers come in, and then we're probably going to see some buyers come in as it bounces back to the downside. If you ask yourself, where could that be, right? The thing you want to look at is probably the broad S&P market. If we come over and take a look at it, and if we pull this up to look at the weekly is probably more interesting. Here we can see this level right here as a possible place for the buyers to come back in. Kind of coincides with what you have there. That would be the first place I would expect it. The next place down in these areas here And you know, if all hell breaks loose, right, then you could break it, and this would be the failed bounce that leads to the larger move down. Now, if you look at this on a monthly time frame, you know, on the monthly, you actually do have the break now, and so that is something that doesn't happen that often, and so that's bearish, and we should expect this thing to roll over, but it takes time, right? So this thing could build out, take time, and eventually break to the downside. Doesn't have to, but the odds favor that at this point. This is the bullish retest region, this whole area here. So as it comes back up into it, which is what it's doing now, it can actually travel all the way back to the top third. And that could trade up to about 27, anywhere from about 27.37 up to the highs, which is about 28.50, I think it is. 28, let's get the number on it, 28.35. And so 28.35 from about 2600 all the way up to 28.35 are all possible. We're into the 26s now, or almost at them. And so that's what you have to expect, right? That's the big bounce. If it rolls after that, right, and we're talking long term here, we're on the monthly chart, but if it rolls after that, so you make the big bounce and you roll, eventually the targets are down here. And that's a long way down. We're talking about 2000 to 2100. But that will take a while to play out. And by the time I broadcast again, I suspect it hasn't happened yet. My guess would be that it won't have happened yet. But that's kind of the long-term picture of what's probably trying to set up here, which is going to be dependent on there actually probably being a recession and a downturn in the economy. We don't know that yet. Right now, we just know that there's some slowing, but the expectation, at least right now, with the optimism that's kind of come in on this big bounce off the bottom, is that in fact, you know, things are going to be okay. We're going to get that soft landing, and then turn this market around and run again. And there's precedent for it. I mean, it has happened before. Each time you get a break doesn't necessarily mean you're going to get a huge drawback. You already had a 20% move here. It was right at 20%, so, you know, could be the whole thing, right? The whole enchilada may have already happened. Look back here, 2015-16 period, you had a long consolidation before an eventual rise up to higher ones. There's nothing that says this one can't be another long consolidation. So that's possible. But the odds are that it's probably more ominous than that, at least in my opinion, and that after the big bounce in some sort of a failed bearish retest region, this market will probably roll back over. In the interim, it's going to bounce, and it's going to continue to bounce. And that's what I describe as we go along in my updates. And so if you want to be part of the TAToday fold, come over, get yourself a login, check it out, right? It's free. You can check it out. Matter of fact, there's some cool games you can play, the chart game here, and so forth. So I would encourage you to take a look at what we do. You know, if you look back at the last video I put out, December 9th, I think it was, I talked about the scenario of the break. The break took place. Now I'm talking about a bounce. Bounce is taking place. After that, after a few months, probably should get the roll. Have yourself a good one. I'm LA. This is TAToday.com. Take care.